Hey, what's up? My name is Miles. I go by Market Milli here on YouTube. And in this video, I'm going to be going over the top 10 things I've learned in my first year of full-time day trading. So if that's something that sounds interesting to you, stay tuned and watch the video. So first off, I want to say thank you for joining me. I'm going to be going over my top 10 lessons that I've learned in my first year of day trading. And if you're someone that might be thinking about wanting to get into the industry, this might have some value for you. Definitely topics that you should do some more research on and learn more about. So this is in no particular order. I just went off of what are the top 10 things that I feel I learned. First thing I want to talk about, risk management. So risk management is something that is talked about in many different forms. When I first started, my understanding of risk management was always risk one to make two, to make three, to make four. But risk management goes a lot deeper than that. And that's what I'm going to talk about here quickly. So on TradingView, there's a tool that allows you to go short or long. Since in this case, price is going up, I'd like to show you an example of a long position. So this red area here, this would basically be my risk. And before, when I first started off, say with $1,000 account, I would enter with my $1,000 account size, and then I would adjust my risk to always be less than what I would look to gain. So I thought I was doing it right, having a proper risk to reward. But what I didn't take into account was, depending on what time frame I'm working with, and depending on the size of the move, if I'm always entering with $1,000 and then adjusting where my stop loss is at the time, my stop loss could be like this and I could lose a little bit, or my stop loss could be like this and I could lose a lot. So it was very hard to stay consistent with how much I was risking to lose on every particular trade. When I found out about that, I did an Excel spreadsheet that had some calculations. I would always have to type it in, so that would slow the potential of me entering a trade, and sometimes I would miss a trade, or sometimes I would type a number in wrong. So a nice trick that I found on TradingView, you could actually go to this thing. You can have your risk to reward set up based on where you want to enter and where you want to exit if it goes the wrong way, or where you want to exit if it goes the right way and take your money. So if you right click on this tool, click it, right click, go to create order. Now it automatically puts your entry, it automatically puts your stop loss, and it automatically puts your take profit. So you don't have to put these 5-digit numbers 3 times, like for your stop loss, for your entry, for your take profit. It automatically does it for you. And then on top of that, what you can do is, if you can be in control of every single trade, you know exactly how much you're willing to lose if the trade goes in the wrong way. So if you want to risk $100, $200, $50, whatever it may be, you can stay consistent with that. So you could choose a dollar amount here, or you could choose a percentage. Me, I like to use a percentage because as my account grows, my risk increases, but my profit also increases. And as I'm losing, then my risk decreases because it's a constant percentage of my account size. So I like percentage, and it also gets me away from the thinking or the mindset of thinking about profits and my account size and dollars, you know what I mean? So thinking percentage is just a psychological trick that I prefer to use, and helps me think of what is happening in front of me as opposed to thinking dollar amounts. Now taking risk management a little bit further, I've actually created something for myself to visualize, but also something to show. So now thinking of risk in the way that I like to approach my trading and thinking in terms of percentages, because that also allows you to compound and grow it faster if you're on a winning streak, is what I used to do before. Say for example, I had a $1,000 account. I want to be making at least like $200 or $300 in a day to make it worth my while, and to also be confident that what I possibly make in a day could sustain my lifestyle and pay for my bills per month. Now, with $1,000 account, I was risking to lose around $200 in hopes to make $200 to $300, potentially $400. But what I failed to realize was, on my $1,000 account, to risk to lose $200, that's a 20% risk. I'm taking 20% risk on a $1,000 account. If I lose $200, if I lose that first trade, it becomes $800, and then I lose the second trade, it becomes $600, and then $400, and then $200. I only need 5 trades to blow that account. Yeah, what I've come to realize is that, to be sustainable, or to sustain yourself and your account size in this field, in this industry, you need to have a larger account size, and then you need to risk less. So for example, here with a $50,000 account size, you can see I risk 1% and I make a decent amount, something that I'm happy with. But because I'm only risking 1%, it's gonna take forever for me to blow that account. Like 25 trades won, I made 5,890. 25 trades lost, I'm at 38,500, as opposed to minus 3,600 in the case of losing 20%. And I've taken the same example here, using a $50,000 account, trading the way I used to trade, and see how fast you can lose that account. Same thing. So that's one thing about risk management. Understand your risk, understand what percentage, and it comes with learning this, and learning your risk appetite will come with time, I think, because you have to understand your strategy, you have to understand your edge, and potentially based on your edge and your win percentage, how many trades can you possibly lose in a row before you lose your account. And you want to play it conservatively, so that our jobs as a trader is actually to manage risk. I've realized that now it's not to make money, it's to make your account last as long as possible, so that you could potentially see those gains based on allowing the probabilities to play out in a long period of time. So yeah, that's a quick thing on risk management. I think it's a very important topic for an aspiring trader or someone new to really understand, and that'll allow you to keep your accounts alive as long as possible, and also learn for as long as possible, while also losing as little amount of money as you possibly can, especially at the beginning. Don't try to get rich quick. Try to learn as much as you can, and once you've learned, then you can increase the amount you could potentially make. Now, the next thing I've learned about was different ways to enter into a trade, or different ways to enter the market. So going back to TradingView, here on the order panel, you can see there are 3 different types of ways you can enter into a trade. One is market. Market is basically, say for example, I just want to enter a trade. Say I'm thinking the trade is about to go, the trade is about to continue up, and price is currently right here at this point. Here. If I market execute, it'll enter me immediately at the current price, whatever price the market is currently in. That's market execution. Now, limit order, what that is Say for example, you saw price break through this level of resistance. Now you want to enter a trade when it comes back to test that level of resistance, anticipating that it will flip that level of resistance into support. What you can do is set a limit order for that price, and when price comes back, that's when it enters you in. As price comes back to that area, and then it enters you in and then continues to go. Personally, I don't like that because you're basically guessing what price the charts are going to stop and change direction. There's not as much confirmation for me for the way I trade and what I'm comfortable with. And I've tried it. I just don't like limit orders. Now, there are a lot of traders that trade successfully with limit orders. I'm just sharing what works for me. And what works for me is stop orders. I prefer this because I like to trade with the direction of the trend and with the direction of where momentum and volatility are currently going. So as you can see in this example, price is currently around here at this orange line. And if what I'm waiting for is price to break through that orange line and then also break through the previous high, because when it breaks through the previous high, I'm anticipating that it could potentially push further up. What I'm going to do is set a stop order, like a stop limit order at this price. So what happens is when price pushes above my desired my designated price, as the markets push up past my designated price that I'm interested in entering at, my order will automatically execute to enter the trade at that given price. So the third thing that I learned in my first year of trading is the importance of understanding how emotions play a role in your trading and how they can control your trading in a possibly negative way. And one thing I had to work on was putting my faith over my fears, because I have lost a lot. And there are times when I hesitate on an entry because I don't want to lose. There are times when I take profits too early because I don't want to give those profits back, or there are times where my trade is losing a little bit and I cut it off because I don't want to lose more, and then it continues and it's huge profit that I potentially have missed out on. There's so many things about emotions. Fear and greed take your mind away from the present, and it's so important to be fully in the present while you're trading, because the charts are constantly moving, constantly changing directions. You want to be quick with your thinking to be able to react to what's currently happening. And if you're not thinking in the present, you're going to be thinking slower. So what I mean by faith over fear is just have faith. Just have faith that you put in the work, you put in the time, you understand what you're doing. Stop second guessing yourself. Stop questioning yourself. Just take the action. Enter the trade if you're confident in it. If you've done your analysis, if you've done your pre-market routine, your pre-market ritual, you're ready, you're alert, just take it and then manage the trade as it goes. And have faith, right? Have faith that you understand what you're doing and then you just let it play out, basically. So number 4, I learned that process is key. And what I mean about process is key is, especially at the beginning, obviously everybody that enters this industry is probably enticed by the lifestyle or potential income that you can make, and everybody's focused on that. But what you need to actually focus on is learning the skill first and following the process and just falling in love with the process of learning this skill and all the ups and downs that may come along with it. Things such as having a process when you wake up. How do you prepare yourself before you actually start looking at the charts? What things can you do to be mentally prepared and mentally focused and sharp to perform your best? What's your strategy? What's your risk management? When you enter a trade, what do you like? What do you see while the trade is running? And how do you manage that? Create a process for yourself and then follow that process. And that's how you'll find consistency, and that's how you'll grow your account. Prop firms. I really do appreciate that they are in existence. I think before, basically, prop firms were a thing that were businesses that were a thing in like Chicago or New York, wherever they got like those major stock exchanges. And you had to apply for a job, go for interviews and stuff, and they would have to like you and hire you. Then they let you trade with their capital. How prop firms work now in our era, you're not applying with your resume. You're applying with an evaluation. You're taking a test, and if you pass that test, then you get the funds, and then you take a split of the profits that you make. You eat what you kill. Some prop firms offer 90-10 splits. Some prop firms offer 80-20 splits. Some prop firms offer 60-40 splits. And prop firms, there's a ton of prop firms out right now, and they all have different rules and different pros and different cons, different advantages, disadvantages. And I've done research into some prop firms that I've heard about and the differences of, what the different rules are, because you're basically working for this company. They set the rules and you have to know how to play the game according to their rules. Some of them have different payouts, whether there's payouts that you can take out anytime. Some of them have 2-week intervals. There are also scaling options where if you hit a certain amount in your account size, you can actually scale up and double that account size. There's different things. Depending on how you trade, you have to find the prop firm that best suits your style of trading, that'll give you the highest possibility of passing so you can start gaining those returns. So prop firms are a great thing. I actually have a discount for the prop firm that I'm currently using. It's for me specifically and my friends, my family, and anybody that I know. It's actually, the discount code is FAM10, FAM10. So you can use that for a 10% discount at Funded Trading Plus. So check that out if you're interested. Number 6, journaling. Journaling was something I used to be against, just because, one, I thought I was smart enough to remember everything, and two, I just felt it was boring. But at one point in my journey, I was just at such a low point, willing to try anything, so I started journaling. I've heard enough people talk about journaling that it made me say, okay, if all these professional traders that I'm watching on YouTube and stuff, on interviews, they're all talking about journaling is one of the major keys that brought them to success and consistency, I thought, hey, let me give it a try. The worst that could happen is I spend a little bit of time and it does nothing for me. But the best thing that can happen is it makes a big impact on my trading and helps me improve. So, for example here, this is my trade journal. I journal a little bit differently now, but when I first started off, I really wanted to be detailed. I really wanted to be extremely detailed with my data. So what I used to do as you can see here, I would have the date, I would have the date, the time that I entered, the time that I exit. Was it a win? What time frame did I enter on? What was the time frame that I saw my setup? Where was I watching for structure, on what time frame? What time frame was I watching for? What time frame did I find my support and resistance? Sometimes I put what direction the market is, whether it's bullish or bearish. What was my total RR if I won or lost? If it was a -1, my +2. The setup type. What was my setup? This allowed me to see consistently. This setup works. This setup doesn't. And at this point, when I was starting off, when I was new, I was taking every single potential setup that I could recognize. Now I take one setup. What session was it? Was it a break even? Did it hit take profit? Did it hit break even before it hit my take profit? Did it hit my take profit? And then come back to hit my stop loss? What were the pips? So I could kind of have a gauge of what was my consistent sizing, so that I could get more familiar with where was I successful and where was I not. I would put some comments. What did I see at the time? What were my emotions? Emotions was something that I added to this later, but I think if I was to do it now, I would start that a lot earlier because emotions are so key. And I would post some charts. So very detailed. I have charts, I have notes, and then I have all this other data. And having all of that, then going week by week, month by month. At the end of every week, I would review the last week that just passed, see what I was doing good, see what I was doing bad. At the end of every month, then you get a larger scope, a larger view of exactly all the things that are going good and all the things that are going bad. So I think journaling is very important, especially at the beginning. And let me show you how I currently journal. So basically how I journal now, it's a little bit more simple because I am so focused on one setup and one strategy. It's basically just screenshots and a little bit of notes and a little bit about my emotions, because now I'm consistent with my setup, I'm consistent with my strategy, I'm consistent with the time frames that I like to use. So I no longer have to track that information because it's already locked into my head, and it's become such a process that I've ingrained in the way I trade that I no longer have to track that. Now I understand those things. Now it's just a matter of me making sure, did I take my setup and did I manage my trade correctly, and what were my emotions during that time. And then that way, if something went wrong, I can see, I was not in the right mindset at that day, or mind state at that day. Something was going on in my life, and then I can learn to recognize, when these things are going on, maybe it's better to stay out of the markets, because making nothing is better than losing a lot. 7, be aware of the news. Let me show you an example of something that happened to me before, that happened to me plenty of times, but this is why I came to realize that be aware of the news, especially in a bear market, because news can be such a impact on the charts. So here's a chart of Bitcoin. I took this trade here, and I believe I probably exited early around here. And I think what happened was, I can remember it. What happened was, because I exited here, but it actually hit my full take profit, I was feeling a little bit of FOMO, which is fear of missing out. So what I decided to do was, as price came and got rejected at this support that flipped to resistance, and then there's a big engulfing candle engulfing this bullish candle, testing this previous low that it made. So now it's bearish structure, just following structure, right? I entered at the break and hit my full take profit for what looks like a 2-to-1. And then what I was expecting now was As price came down here, now it's starting to create bullish structure. What I was waiting for was this entry for price to come back, because it made a low here, made a higher low. Now this is what I'm seeing as potential support, where there is a large demand that pushed price through this level of what was support and then became resistance, anticipating that it might come back to test it, and at that point I would like to take an entry for a long to follow the structure. But what happened was price was getting here, price was at this point here, and then there's a push that got rejected, big engulfing candle here, so I took a short. And keeping in mind, the entry that I was actually interested in was this one here, but because I saw potential for it to come, because I was waiting for it to come down here, I said, okay, well, why don't I take this short and make money both ways? And what happened was news came out and it shot up, stopped me out for a loss, and then went straight to my take profit and to my entry, which, because I was involved in this, I was too flustered to take the original entry that I was waiting for, which would have been a very nice profit. So that's what I'm saying about news. Volatility gets extreme, especially if you're looking at the lower time frames. One tool that I use to look at news every single day, I've made it a habit to check this website every single day before I even get to the charts, so I'm prepared and aware for anything that may potentially come up. Is forexfactory.com. What's nice about it is it'll tell you exactly what currencies may be affected by the news. Yellow folders I don't worry too much about. Orange folders I'm a little bit cautious of, and if there are any red folders, I just stay out of entering any trades at that time if it's affecting the pair or symbol that I'm wanting to trade. I just stay out. I wait for it to do the craziness and choose a direction to trade in, and then I'll get into the markets. So forexfactory.com, I'm pretty sure that's basically the site everybody uses. So okay, number 8, focus on what you control. So as a trader, what are the things that you can control? Where you exit, where you enter, like where you exit for a loss and where you enter, and your emotions and your psychological state. Those are the only real things that you have in control, have at your control. You can't control what your profits are. You just allow the markets to give you what your profits are, right? One thing that's really helped with my trading is I focused on figuring out the best timing to enter my trades where I can take my risk off the table immediately. Meaning I want the price to go in my direction so I can quickly move my stop loss to even, and at that point there's nothing to worry about. I either make money or lose nothing. That was what I focused on, and that really helped me with my psychology, my consistency, and my comfortability of entering trades. Paper trading is something that I really wish that I learned about a lot sooner. Let me show you an example of paper trading here. Okay, so paper trading is a great tool, a tool that I wish I would have found out a lot earlier in my day trading journey, because rather than risking my own capital, my own money to learn, I could have risked fake money, and then when I felt ready, then I could have actually risked real money. So basically, I'm going to enter a trade, and right now I'm on my paper trading account. So now here you can see this is where I entered. If it comes up to here, I want to exit that trade for a loss. And if it comes here, comes back down here, I want to take my profits and exit that trade with a win. And down here you can see it's actually showing me the dollar amount that I'm currently losing. So you can see the numbers going up and down. What I used to do, which what I thought was paper trading, was I would see something and I would just like go like this. I would just put it there and then watch and see what happens, which was cool too, but this feels a lot more real because you actually see numbers going up and down on your screen. And not only that, it keeps a account size, so you can actually see if is what I'm doing working, is my account growing, or is it not. So that's why I really like paper trading. I paper trade on TradingView, and it's free. Everything you see that I'm doing here is completely free, so why not try it out? If it's something you want to learn, even just get a feel for it, see what the volatility and see how difficult it is to actually make money in these markets. And if it's something you want to try, maybe this is the first step to see if this is something you can deal with the emotions, deal with the volatility, deal with the uncertainty, and just see for yourself. The only difference with paper trading and live is there's a lot more emotions when it comes to trading with real life capital because there's money involved. In this case here, I'm not saying I would have taken this trade. I just wanted to get into a trade to show this paper trading example. But in this case, if it hits my stop loss, I really don't care. If it hits my take profit, great, it worked. I'm not gonna even manage it. It's just stop loss or take profit. But if I was actually trading with my own money, then I might be more enticed to, if price goes my way, I might move my stop loss to break even. I might trail my stop loss to lock in profits, things like that. But with paper trading, there's really a lot less emotions. I think I'm a paper trading millionaire already at this point. And last but not least, I've learned to just trade my session. Before, what I used to do was I thought I had to be active for the entire day, trading every single session, trading at basically I would set alarms at these certain levels, and anytime these levels got hit, I would look for trades. But it wasn't working for me because what I've come to realize is I like to catch these trades with volume and volatility and momentum. But those trades that come with volume, volatility, and momentum are caused by larger orders in the market that only come during certain times where there are a lot of buyers and sellers in the market. So learning that and learning at what times are best for my certain type of way of trading, which is breakout trading. Now I trade from around 8:30 to 12 at the most, but a lot of the times I can be done my trading day. When I get in a trade, sometimes I could be done in an hour. Sometimes I'm done in 2 hours. Or the thing that takes long when it comes to trading is actually just waiting for your setup or your pattern or the right timing to enter a trade. And that's one of the biggest things that I had to battle with was I wanted to be active all the time. I thought to make money, you had to be active. But actually now I'm realizing that you make more money by being less active and being more patient for the perfect time for you to enter these trades. Because winning 1 to 2 good trades in a day is better than, taking 10, 15, 20 trades in a day that's draining your mental capital to think clearly for the following day, for the following trade. You're just so drained because you're constantly thinking about the next trade that you want to take. And while you're in the trade, you're also watching the charts, you're managing those trades, you're feeling the emotions constantly. It gets very emotionally draining. And when you're emotionally drained, you're definitely not going to be thinking clearly. So keeping it simple, trading the sessions for a few hours, and if nothing shows up, be okay with not taking anything. Like I said earlier, making nothing is better than losing a lot, right? So you don't need to force anything. The markets are always moving, and there's always going to be a trade to find, depending on your strategy. For me, I'm a scalper, so I feel confident that when I show up to the markets every day, I feel like I could find at least one trade during that 3-hour session that I'm looking for a trade. So the last topic, it's not really a point, but the last thing I want to leave this video off with is just trust the process. I realize it's not about what you want to achieve, but it's who you become on the process of getting to where you want to get to. That is the ultimate reward when you get there, right? Trust the process. The process is the key, and follow it. Fall in love with that process, right? Fall in love with the constant learning that you have to do. Fall in love with getting 1% better every day and compounding that. Fall in love with following that process that you've designed for yourself, that works, that you've tested. Fall in love with that and hammer that nail consistently every single day. And eventually that nail will be flushed to the floor. And you'll get to where you want to get to. But it just takes time, and you got to give it time. And you can't rush it. It'll come when the time is right, when you're ready for it. But just trust the process and fall in love with it. But that's basically it for me for now. Those are my top 10 things that I've learned in my first full year of day trading. I hope me sharing some of these things will help you along your journey, or allow you to know some things that have really helped me. If you're just looking to get started, definitely look into some of these topics and dig deeper into it. And if I miss something that you think is key to your success in your first year, feel free to leave it down below and let's have a conversation. But that's it for me for now. I go by Market Milli here on YouTube, and I'll see you in the futures. Peace.